I think 2024 is going to be very, very interesting for capital markets. But if you look what's happened in 2023, where we've been obsessing about what's happening to interest rates, what is the policy of the central banks, what's going to happen to growth, I don't see that really changing in terms of 2024. I think that's going to continue to be a focus as we go through next year. The difference is we're going to be on a different pathway as we go through 2024. So 23 has been about interest rates continuing to go up, weakness in bond markets, resilience, probably more than expected resilience in terms of economies and economic growth, particularly in the US. But as we go into 24, I think that continued resilience in economies is probably going to persist, but we're going to start to look at interest rates coming down because inflation is way below where we were at the beginning of 23 and at the end of 22. So that pathway is going to be quite different in 24, and that is going to have an impact on markets as we go through 24. But to be fair, it's already had that impact as investors look forward to 24 in the second half of 23.
شهدت الأسواق العالمية ارتفاعات قوية خلال شهر نوفمبر. هل تتوقع أن تستمر موجة الارتفاعات في مطلع عام 24 كذلك؟
I think the rally that we've seen in equity markets and bond markets, including credit markets, in November of 23, we got to put that into perspective because actually it's just a reversal of what occurred in August, September, October of 23. So we go back to the beginning of August and bond yields in the US, 10-year yield was at 4%, went up to 5%. We're coming back down to that 4%, towards that 4% as we head through December. If we look at equity markets, the S&P around about 4.6, its highs at the beginning of August fell to just above 4.1 towards the end of October. We're back towards that 4.6 again as we go through December. So I think it's important. Yes, we've seen that rally in capital markets in November, but it's a reversal of what we saw over previous months. What caused the markets to go down August, September, October? It was fears that rates may have to go up again. Certainly that rates would be higher for longer. And then when we hit November, it was rates are peaking. And actually, will they remain higher for longer? We actually believe they probably will remain higher for longer. But we need to put into perspective the fact that the November rally was just a reversal of what occurred in previous months.
تحدثتم في تقريركم عن العوامل الجيوسياسية التي دخلت إلى المعادلة، فإلى أي مدى تتوقع أن تؤثر المخاطر الجيوسياسية على أداء الأسواق العالمية السنة القادمة؟
Well, certainly if we look at the geopolitical challenges that we see and the human tragedies in wars in Ukraine and in Gaza, they have had impacts on markets. If we look at Ukraine and we look at the impact on the oil price and supplies coming out of Russia with embargoes, that led to an increase in oil prices. When we saw the conflict start and then continue in Israel and Gaza, what did we see there? We saw uncertainty around what would happen in terms of oil supplies. Would there be further escalation? Would there be interruption to supplies? And we saw the oil price rise as that broke out. As that has continued, supply hasn't really been disrupted. And if anything, we've seen the oil price come back down again right now. So the conflicts have certainly had an impact on prices, but the degree to which that impact has been sustained has not been a worst case scenario from a commodity price viewpoint. And so I think the markets or investors have learned to live with some of that uncertainty, but that's partly because of disruption, or the worst fears of disruption haven't actually come to be.
وفي ظل الاضطرابات الجيوسياسية التي قد تستمر، ما هي الأصول التي قد تستفيد أو التي قد تمثل نوع من التحوط بالنسبة للمستثمرين ضد كل هذه التقلبات والغموض؟
Well, I think you've got to be really careful around the conflict that we see. Absolutely can lead to disruption of supply. And I guess by virtue of the definition of that geopolitical tension, we don't know exactly what that is going to be, but commodities would be a diversifier there. So if you look at a central case for capital markets whereby inflation is it's come down. I won't say it's under control, but it has come down. Interest rates can follow that down. That is a positive for capital markets, but that can be disrupted by the geopolitical tension, which could lead to the commodity price rises.